What's with these tech companies and the tone deafness when it comes to how people are going to receive the technology and the message that they put out about that technology?
Bad tech ad of the week. It's our new weekly feature.
Welcome to GeekWire. I'm GeekWire co-founder Todd Bishop.
And I'm GeekWire editor Taylor Soper.
We are coming to you from Seattle, where we get to report each day on what's happening around us in business, technology, startups, science, and innovation. What happens here matters everywhere, and every week on this show, we get to talk about some of the most interesting stories and trends in the news. Taylor, it's good to see you.
It's good to be back, Todd. Can't wait to talk about AI and AI.
We got a lot of AI coming up this week. We've also got Microsoft and Amazon earnings. Tons of stuff on the site. I'll link to the things that we talk about, but I encourage you, if you were busy heads down at work this week, catch up on GeekWire. There was much news all over the place, and we did our best to cover it. But Microsoft earnings in particular were a real litmus test for the current state of AI within the realm of corporate adoption and how much leeway investors are going to give these big tech companies to build out the infrastructure, to spend the billions of dollars for what these companies believe will be the long-term AI demand. Microsoft spent $19 billion in the most recent quarter, a record amount on capital expenditures, primarily to create new data centers and also to upgrade the chips inside its existing data centers. And man, they got hammered. People were not happy with the Azure cloud growth. It was really kind of interesting to watch. You know, Microsoft said that Azure growth was going to be in the realm of 30 to 31% when adjusted for foreign exchange rates. And, you know, they hit 30 on that basis, like the low end of the range. But the whole game of expectations and the fact that it was on the low end, not the high end, and really investors wanted more. They were hoping there was going to be an upside surprise, as they say it. And then how that gets extrapolated into long-term questions, like 1 percentage point, 2 percentage points on Microsoft's Azure cloud growth, long-term questions about whether AI is actually a real thing or not. There's lots of just stuff that kind of boggles my mind at times.
But the numbers are getting ridiculous. 19 billion. And I know Satya Nadella and Amy Hood, the Microsoft executives, got a lot of questions about those numbers growing relative to value being created and revenue being created from those investments. I mean, it's not going to be like next year. I think their outlook is years, even decades away, right, from when the payoff is going to come.
Here is Amy Hood, Microsoft's chief financial officer, discussing the company's capital investments and that long-term view on a conference call with analysts.
Capital expenditures, including finance leases, were $19 billion. In line with expectations, cloud and AI-related spend represents nearly all of our total capital expenditures. Within that, roughly half is for infrastructure needs where we continue to build and lease data centers that will support monetization over the next 15 years and beyond. The remaining cloud and AI-related spend is primarily for servers, both CPUs and GPUs, to serve customers based on demand signals.
But in the meantime, the company is seeing some real momentum in AI. 8 points of that 30% revenue growth in Azure came from AI usage in the latest quarter. And on the earnings call, Microsoft CEO Satya Nadella discussed the momentum for GitHub CoPilot, which is the AI assistant for software development.
GitHub CoPilot is by far the most widely adopted AI-powered developer tool. Just over 2 years since its general availability, more than 77,000 organizations from BBVA, FedEx, and H&M to Infosys and Paytm have adopted Copilot, up 180% year over year. Copilot is driving GitHub growth all up. GitHub annual revenue run rate is now $2 billion. Copilot accounted for over 40% of GitHub revenue growth this year and is already a larger business than all of GitHub was when we acquired it.
Based on what happened to Microsoft's share price initially, at least after the earnings, investors are not happy with that. And it just seems short-sighted to me, honestly.
Especially when you have a company that is generating $22 billion in profits, right? I mean, these companies are just printing money, and that's why they have the capabilities, I think, to do these type of investments. But to bring this all the way down to the startup level, I was at AI2 Incubator's barbecue last night asking the founders and investors there, hey, how are you using AI, and is it actually valuable? And there were some really cool examples of how it actually was helping people become more efficient, more productive, saving time. But it feels like it's such early innings. It's naive to say that AI is going to be like crypto or NFTs and it's just another, boom and bust. Clearly, AI is going to have a lot more impact, but it still remains to be seen, right? And I know, Todd, you've been a big AI proponent, I'd say, of different tools that you love, but it just, I don't know, hasn't made my job like amazingly more efficient yet.
I read that piece with a lot of interest, the one where you went and you talked to a bunch of different people, and the question was fundamentally, how has AI changed your work? And for some of them, it was clear it hadn't really changed their work. It was more something they were dabbling with in their personal lives. But for other people, the two trends that really stood out to me from the answers you got were, one, people love Claude.
Yeah.
And I got to tell you, that has not been my experience with Claude. It makes me want to keep trying it over and over again. Every time I try it and I do a head-to-head with ChatGPT, Claude, and Google Gemini, Gemini is always the worst. Claude is always second. Some weirdness that I always run into with Claude. And then ChatGPT is always on it. ChatGPT 4.0, Claude 3.1. I mean, I'm using the latest versions of these technologies. I'm paying for Gemini, and that's the way it always stands out. All right, so Claude is one of the trends that I noticed. The other trend that I noticed was very specific applications that people are using AI for. You're really starting to see the models being applied to biosciences, research, marketing. Of course, it's been marketing from the very beginning, but some very specific uses of marketing. And then also people taking AI models and customizing them for their own data. I thought that was a fascinating cross-section of uses of generative AI. And to me, it shows that there is some value there. There's value there. And I think investors are overlooking that. And just one last thing I'll point out here. There was a really eye-opening story on the other side of this issue from Business Insider about an executive who had tried and not been happy with Microsoft CoPilot, Microsoft's AI tool. Sometimes I feel like a little bit of this is user issues where people just are expecting too much and not willing to put in the work that it takes. I mean, this thing's an assistant. And to really get an assistant to work well for you, you got to work with it. And you can't just press a button and say a magic spell and think that everything's going to be taken care of. It takes some work, but done correctly, it's an accelerant, in my opinion.
This is so interesting that the user has a lot more power here in terms of the value that they realize or that they see from these tools. As you named off Gemini, GPT, Claude, I was thinking about the search engine, race back in the .com with Alta Vista, Ask Jeeves, you remember all those, and ultimately Google was the big winner there. But that feels like such a more simple user experience, right? It's just a box and you input something to search and then the site gives you something. Whereas with these AI LLM tools, it's really upon the user. And if the user knows how to effectively take advantage of the tool and really ask the right questions and lay out the information for the robot to be able to understand and then produce an output, that makes a huge difference. So it seems like education is really big here and just trying this stuff out and getting good at it. I think we've heard a lot from AI experts in Seattle at these events saying, you just got to try it every day, give it a try. And so that's probably what I loved about this poll that we did at the event last night, is just seeing how people are using it. And one of my takeaways was just, we got to be trying this stuff out and seeing what works and getting good at it, or else you may be left behind.
All right, Taylor, I still want to talk a little bit about Amazon earnings. So let's do that when we come back. You're listening to GeekWire, and we will be right back. Welcome back. It's Todd Bishop with Taylor Soper. We're talking about a busy week in the news here in Seattle. Microsoft earnings were Tuesday. Amazon earnings were Thursday. Both of them in different ways disappointed Wall Street and saw the results in their stock prices going down. Amazon was a little bit different. They came up light on revenue, below forecasts on revenue, but their profits nearly doubled. This was really interesting to me because it plays into this broader trend of consumers being more cautious about their spending. That was one of the factors that Amazon cited for their lower than expected revenue. And you're seeing the competition from Temu and others in China changing the way that people think about prices and delivery speeds. Amazon's trying to lower its overall cost to serve in general to be able to provide more everyday essentials. This goes beyond Temu and Shein. Frankly, it's more about competition with Walmart when you're talking about fast delivery speeds and low prices on everyday items. The bottom line there is they are going to try even more to reduce costs. They are really trying to reduce their overall cost to serve to be able to compete more aggressively on price. Here's Amazon CEO Andy Jassy discussing the company's strategy on its conference call.
We have a number of opportunities to further reduce costs, including expanding our use of automation and robotics, further building out our same-day facility network, and regionalizing our inbound network. With more optimal inbound inventory placement, we expect to enable faster speeds, consolidate more orders in one box, and reduce inventory transfers once items reach a fulfillment center. These cost improvements won't happen in one quarter or one fell swoop. They take technology and process innovation with a lot of outstanding execution, but we see a path to continuing to lower our cost to serve, which, as we've discussed in the past, has very meaningful value for customers in our business.
My big question here is this just a temporary blip in the economy, or are we seeing a fundamental change in consumer behavior, much more price conscious, because of these larger trends that we're seeing, not only in grocery, but also in the mindset that is created by Temu and Shein?
Totally. I mean, customers want the cheapest prices. And I've been thinking as I shop, I love to window shop and then go on Amazon and look at the price while I'm shopping in person at another store. And the consumer having a lot more knowledge about pricing at different places, I think, is going to be really interesting as the companies try to figure out what the right pricing is and how low to go.
Fundamentally, I think this is an era where there's so much competition, in part enabled by technology, that ideally the consumers are empowered. You're listening to GeekWire, and we will be right back. Before we wrap up here, Taylor, most interesting startup you saw this week. Tell me about it, because a lot of times we talk about these big tech companies, but there's so much interesting stuff happening in the startup landscape. Taylor Soper's most interesting startup of the week.
Is this a new feature that we're doing on the podcast? I'm down. There's a company based here in Seattle called Form3. It's started by a couple longtime technology executives, Adam Brotman, he's a former digital Starbucks leader, and Andy Sack, a longtime startup investor. They dabbled in NFTs. They built an AI creators community a couple years ago, but what they are most excited about, which they just released this week, is Spock. It's the name of their new AI marketing teammate. And so what this is, much like we've seen Microsoft's GitHub CoPilot as a software development assistant powered by AI, this is a marketing AI teammate that helps you not so much with the execution of marketing tasks, but more in the beginning stages of your marketing campaign when you're doing research on competitors, you're doing keyword research. Spock is able to take in a number of different data sources, including your own internal data, external third-party data, and it uses a combination of OpenAI's GPT-4o and several other models to ultimately give you this AI assistant that pretty much is like having a human marketer assistant on your team. Now, would this actually be of value and be as good as a human worker? I think that remains to be seen, but certainly another example of a company, in this case, a smaller company, building a AI teammate, if you will. And so, Andy Sack told me that he thinks this is going to be the standard, not just across coding and marketing, but every facet of every business, where you have these AI agents basically doing a lot of the grunt work and having the humans come in and doing more of the human focused creative type of work that robots are not capable of yet, at least. So really interesting play here. It's two longtime technology vets. They're writing a book about AI now. They've talked to people like Sam Altman and Bill Gates. And so they are certainly informed about the trends. So there you have it, Spock from Form3. That's certainly one to watch.
And that's spelled SPOK, and it's Andy Sack and Adam Brotman. I'll link to that from the show notes. That's a good one. Here's my talker of the week. Yes, we're testing out some new segment ideas here. The story that caught my attention is the fact, and frankly, based on the traffic, a lot of readers' attention, the new CEO of Boeing, Kelly Ortberg, will be based in Seattle, not Chicago. And this stirred all sorts of interesting conversations. The whole notion that the CEO in the past had been distant from the manufacturing operations, potentially maybe not contributing directly to the problems that Boeing has had, the many problems that Boeing has had, but certainly not helping. Maria Cantwell, the U.S. Senator from Washington State, said, quote, "It's a good first step that the CEO will be based in Seattle, and now the rest of headquarters needs to move back home to rejoin our world-class aviation workforce. When it comes to quality and safety, being close to the workforce on the ground matters." Man, one of the first stories that I really followed closely after I moved to Seattle was Boeing's departure. I mean, it was shocking to the region when they moved out from Seattle to Chicago. To see this come back around, wow. And again, we don't know if they're actually moving the headquarters, but in this day and age, when the CEO is in a place, especially in the world of remote work, that's the headquarters.
And of course, Boeing, a majority of Boeing's workforce is on the ground in the factory, and their corporate headquarters is a small percentage, but this seems symbolic, not only for Boeing, but to Cantwell's statement, this seems like it would be good for Seattle and the state of Washington just generally.
Okay, so that's my talker of the week. And then one more, Taylor. Maybe this is a competing talker of the week. You brought this up just today. The Google ad at the Olympics. It's essentially a young, aspiring track star whose dad asks Gemini to write a fan letter to a current track star.
She wants to show Sydney some love, and I'm pretty good with words, but this has to be just right. So Gemini, help my daughter write a letter telling Sydney how inspiring she is. And be sure to mention that my daughter plans on breaking her world record one day.
The backlash over the notion that this dad would ask Gemini to write a fan letter to this Olympic athlete on behalf of his daughter is fascinating. And I got to say, this may surprise you, I agree with the backlash. What a stupid ad that was. Stupid ad. And it comes on the heels of Apple's really dumb Crush ad. You know, you brought this up. Like, what's with these tech companies and the tone deafness when it comes to how people are going to receive the technology and the message that they put out about that technology?
Bad tech ad of the week. It's our new weekly feature. But I agree with you, Todd. I think our colleague Kurt Schlosser, we all had the same reaction, which was, that's kind of weird. Like, you know, you're asking the robot to write this heartfelt letter to her hero in sports. Like, I don't know if I really want to use that. Aren't they doing focus groups to test these ads out? Or is this just a huge bubble that these companies are seeing AI as this amazing tool that's going to help society, and maybe the rest of us have a different opinion?
To me, it gets back to the conversation we were having at the very beginning. This stuff is not replacing us. It's augmenting us. And if you're just going to put the message out there that this thing's going to write the letter for you, no. At most, the dad could have said, like, hey, suggest some themes. What might my daughter want to say? And, you know, like, but not write the letter. I mean, come on.
Yeah, you could think of a lot of different use cases, Olympics related, where Gemini might be able to help. Yeah, the letter just didn't hit the mark.
All right. End rant, Taylor. That's all I got in me.
Google's robot writing heartfelt letters.
Yes.
And what was the other stuff?
Investors.
Hey, it was fun hopping back on the podcast with you, Todd. And geez, AI, it's such a crazy world, and the news cycles and the way it's moving is so fast. There is so much AI innovation happening here between the startups, Microsoft, Amazon. So it's an exciting place to be.
All right. Thanks for listening, everybody. Until next time, I'm Todd Bishop.
And I'm Taylor Soper.
We will be back next week with a new episode of the GeekWire podcast.